All right, folks, welcome to a weekly market recap. This week it was a negative 1 hour week. We did have missing trades here. Our missed trade was the Friday trade, which after we lost, we had another setup which that one delivered, which that would have been a beautiful short opportunity. But other than that, we had another short which was on Thursday, which went to a loss. We had another trade on Tuesday, which overall went to a win, 3 RR, 3.5 RR, a negative 1 RR, another negative 1 RR, and another 3.7 RR. So would have ended up on a week with a 4 RR, 3, 6, if you had put 7, right? 7 RR minus 2, 5 RR week, right? But we only lost negative 1 RR, and we didn't make nothing because this trade was a mistrade, mistrade, mistrade. And the Friday trade, I was going to take this one, but I was like, it's a miss. I can't take it. My rule says, regardless of the outcome, regardless if I make a mistake or not, I only take one trade per day. And that's why they executed the trade. But we had a registrational block short, a registrational block long, this one was a failure swing short, too, because we had S&P that version with the quality pair. Now, let's get straight into this weekly market recap, which was a negative 1 RR. I'm not going to talk about the days I didn't take a trade. Monday, we did have a setup. Monday, we had a big hard time from SMT with the weekly time frame. So we had a weekly IRL back to ERL, a weekly SMT to the upside, another weekly SMT to the upside. So it was pretty good long. But on Monday, I did have a setup, man, but I didn't. If I were to bypass my rules, I would have a setup every single day. Yes, all the setups will be in a winner, most of the majority of them. But my goal is to have very high position because I'm trading with larger capital. Over here on Monday, this is our CRT. CRT look got souped, but CRT look didn't have a valid low, so I was like, okay, I'm not gonna take it because it doesn't have a valid low. So I was looking for this low to get repurchased. I was literally stalking this fucking low to get repurchased, and he never got repurchased, and it did give us the right amount of one. Eventually, it delivered. Although the only rule I usually bypass, the only way I bypass the high value roll rule is on Fridays only, and Fridays in a specific price point and a specific time, and etc., which we're gonna talk about later on the video because Friday setup is what happened, right? Is that what happened, right? So on the Tuesday setup, which was a beautiful long here, our high potential was obviously bullish. We had a weekly CR to the upside, a weekly SMT to the upside, a weekly IRL back to ERL, and on GU, we go back to GU here. GU has been met this weekly fair value gap. So this weekly CT low already got soup. This weekly fair value gap, pretty sure is this scanner over here, which didn't get tapped, but our ERL did get tapped right over here. This weekly, the low got souped as well. So we had a weekly SMT here to the upside. The only way I knew this would be confirmed was by DXY, but that was even needed, to be honest. Now, the reason I said it's not needed because if you have SMT one pair, that's all that matters, right? As long as you have SMT, you have SMT. Because on this week, the reason why I fucked up a little bit because I didn't pay attention to I didn't fuck up at all. I was right every single day. I was right Monday, Tuesday, fucking Wednesday, Thursday, Friday. I was right every single day. But the higher different drawn location should have been better and more precise because we had a higher different SMT, CRT. I didn't know about the weekly CT, SMT, CRT, but the weekly IR to ARL, I didn't pay attention to, right? But this is the first lesson of the whole week is SMT is SMT. SMT is to the soup. So that means one pair to this pair. So one pair already tapped this order block. One of the pair already tapped this order block while my pair does it, right? So that means he already tapped it because it's SMT. So now we're going from a SMT IRL back to ERL, right? SMT is SMT. SMT is to the soup. SMT is expansion. SMT means one pair taps the other pair doesn't tap it. Is a smart money technique, right? First, this is the name, which means smart money technique. So, yeah, that's what we had on a higher time frame. So that's the lesson number one. SMT is SMT. I must pay attention to SMT in that, especially in the higher time frame, especially in the weekly and daily. Now, going on to lower time frame on a daily. Monday was pretty, buying below the opening price. It was pretty good long in the short and like as well as in the lower time frame on Monday. Before going to Tuesday, it was pretty obvious long here. We had a bullish order flow. We just want to just build a low, break up of the high. We as well had a deep OTE, so we want to buy up the OTE. So we want to go up higher. Now, that right like that, we could have bypassed it because we're so low below this fucking low. And either way, we could have just taken this fucking long from this low, right? We could have just taken this long from this sell side liquidity, because this sell side liquidity was in deep OTE of the leg, right? It was in deep, it was in a deep OTE, so we could have longed up this resistance block of it or just this low of it, right? So either would have made sense. We could have longed either of them and longed it up to the higher time liquidity, putting a stop loss right below this low, because this low was the low that filled this fair value gap. So this low is protected. So the intermediate term low. Now, that's the only way I could have taken this trade. At the lower time frame, I couldn't have taken trade, but the only way I could have taken a trade was basically on the higher time frame, just taking it out of sales of liquidity. And as well, this whole week I was listening to to Romeo a lot on how he trades. He trades on a 4-hour hourly time frame as well. Just literally, I saw one of his recaps back in 2023. He took an hourly resistance block long, right? He took just look at hourly resistance block long out, a 4-hour Marble one long, a 4-hour liquidity long, etc., etc. He took a third drive long, right? Just like this. First drive, second drive, third drive. He took the third drive long, but all the third drive is kind of ass, because you can see there's no good low. There's no very precise low to put it in where you can have a very good ROR, right? But I saw him do this shit and his trade recaps. I was like, yeah. He doesn't really need to go to the lower time frame to look for the entry pattern. All he needs to do is just fucking execute the longer term and higher time frame, right? So in this case, would be the 4-hour time frame to long it up. So that was less enough money. Less enough money. We could have short longed up this. I'd rather say resistance block, because you can see if you get to lower time frame, market this step below it. But what are the chances you can actually buy from here? Like, market whipped out of that shit, right? If you go to lower time frame on that specific day, what are chances of you catching that, right? So it would be very low. The chances of you catching this trade would be very, very low, right? Because market stabbed it and went right away from it. So the best chance of you actually catching this trade and not missing it would be just logging it up from the 4-hour resistance block. Although the wick is not that big of the body, it is a stubby wick, so you could long out of that, because the wick is right on the 886, so it would make sense. You could have longed it for you could have longed essentially whatever, right? As long as you catch the move, which I didn't catch the move, but it was a lessenable day for me. I joined this trade. I was like, this is the best trade. This is the best thing we could have taken on this move, and we could have targeted the higher time frame, which is we had a weekly S&P to the upside, so it made sense to go all the way over here, which was a 21-hour missed trade. Unfortunately, I didn't take it, but this is why we're here for the weekly market recap, journaling this trade. So that's lesson number one. Lesson number one is SMT is SMT. Lesson number two is that we could have just long up this 4-hour sales liquidity or this 4-hour resistance block long, because it was in deep OTE. We had a bullish order flow. We are rejecting lows and breaking highs. We're in a bullish environment. We're in a bullish order flow. We're in a bullish market profile. As you can see, the market profile, you usually want to look at the 4-hour and the weekly. I mean, the 4-hour and the daily. For market profiling, daily was obviously, you can see resisting lows, breaking highs. If you go back in time, sweep out the low, go up higher, push out the lower, and we see this low number got broken. This low number got closed below, so we're still in bullish environment. Once we close above this high, eventually we just want to go up higher. You see, just the order flow in the daily time is overall bullish, right? You can see low got soup, reject below the low, break off the high, reject below the low, break off the high, and eventually a little pullback to accumulate and generate liquidity. Reject below the low, break off the high, reject below the low, break above the highs. You can see all the close below the low. Before he closed, he gave us a model confirmation, so it was valid. Right over here, you can see we had a rejection below the low, break above the high. So right when this low got souped, market went down lower to accumulate. So that's why the market went down here as well, to accumulate enough order to push it up higher, which it did right over here as well. So on Monday, the lesson of Monday is primarily to wake up as long as 4 hours. You gotta be, the lesson of Monday is to be, have free will. Don't be too stuck on the entry, on the lower time frame, on the 1 minute, 15 minute. Just if you got a short the 4 hour CRT, if you got a long the 4 hour session liquidity, long the 4 hour session. If you got a long the 4 hour session liquidity, long the 4 hour session liquidity without looking for the lower time frame confirmation, because you have enough context and narrative that it's not needed to put your low right below this in 2 minute term low, which filled this Fibonacci gap. So that was lesson on Monday, which was a 21-hour missed trade recap. Lesson of Tuesday, which was another missed trade recap here, which was a KOD to the target. Now we had the same context here in a 4 hour time frame. We had a 4 hour, go to the lower time frame. You could see we had this 4 hour CRT. This was our 4 hour CRT. We had a double purge out the high, purge out the low. So eventually we had when we purge out the low, it gives us more confirmation and give us a resistance block entry. Eventually our range high would be here, but we're not targeting that because we're targeting the higher from only. We never break even. We never break even, and we target the higher time frame, which is right over here. In this case, since we're going to the high time frame, we don't really need to have a tight stop. We don't need to have a wider stop loss because we're just doing a KOD here. Now going down to lower time frame, you can see break out the low. There's a valid low here. We had a right model one confirmation. All we have to do is just come back down lower, tap the resistance block, and long this up. Why this and not this candle? Because they're relatively close. So this resistance block would have been the one to enter long out of, as well as. But wondering, well, how did I miss this, T? The only reason why I missed this because I thought, okay, I didn't have the confirmation. I don't have the confirmation during the 1 a.m. candle, so I'm not gonna take it. But the next session is New York session, right? If the confirmation happens at 10:30 or 11 a.m., I'm not gonna take it because the next session there's no next session. Is it PM session? In the PM session that we trade it, is there in the PM session is there a lot of volume? No. But in this specific day, right after London is New York, which is both sessions generate a lot of liquidity. There's a lot of volume, so we could have longed this turtle soup up, right? So it would have made sense. So the lesson of Tuesday is simple, is that the model one confirmation doesn't need to happen during 1 a.m. It could be confirmed in New York. Right, in this case, it happened right on the 5 a.m. candle. So the model one confirmation doesn't need to happen at the 1 a.m. because the next session is New York session. So we trade New York session, so we can bypass the right timing of the model one by simply, because the next session is, as I said before, it's the New York session. So that's how we could bypass it, and we don't really need to have the model one confirmation during that specific time. We can have it, during London and New York, whichever time, but we cannot have it, beyond those times because what is past 11 a.m. The PM session, we trade PM session, we do not trade PM session, we only trade London and New York. That's how I'm only trading Euro and USD, right? So I only want to trade in the AM session. I do have setups that are beyond the AM session, right? I will have setups that can happen at 12 p.m. That would be fine, right? But as I said, the model one confirmation, right? I didn't say the entry, right? The model one confirmation must happen at a specific time, right? As you guys know, for the resistance block entry, resistance block short, resistance block, the resistance block entry, the model one confirmation, and there must be the right model confirmation, and there must be a model confirmation beforehand, before the resistance block entry, right? So the model confirmation must have a specific time, but the entry doesn't need to happen because we could take this, we could take a total soup long and total short, simple. Now, that was lesson on Tuesday, was simple, a 3.5 hour missed trade, as well. We missed another setup right here, which was a 21-hour setup missed trade. I'm just constantly journaling and writing it down and trying to get better day by day, right? So that's the goal over here. I'm just trying to emulate my mistakes because even though this week I ended up on a -1 hour a week, although it's supposed to be a very fucking fantastic week. Although I did end up on a negative, although I did end up on a loss, I'm still happy because, come on, like, we journal, right? Journaling is a part of the process. We have the journal and they make mistakes, and catch you next time. Now going over to Thursday, we had another short opportunity. Thursday we were bearish because we had in my eyes during that time, we had a consistent reversal. We had a daily C to the downside, another daily ERL to IRL. So I was overall bearish in the daily time frame. So going down to lower time frame, I was looking for that short. Our 4 CRT was this 21 o'clock candle. And eventually I was looking to short that down. And I was looking for a New York short. I was looking at the hourly time frame for the New York continuation right here. I was looking for this hourly CRT, which never offered us because the market never gave us the right model confirmation. And it didn't give us the right model confirmation, as well as there was no setups in the hourly time frame. And the hourly time frame was what? It wasn't expanding in one market direction. It says in this case we're bearish. We want the market to do one-sided price movement to the downside. The only way we take the hourly CRT instead of the 4-hour is when the market is doing one-sided movement like this day, right? Market does one-sided movement to the upside. So losing the hourly CRT in these days will be fine because market is doing one-sided movement. But in this case, we're bearish. Is the market doing a bearish one-sided movement to the downside all the way down around here? No. So we did not use the hourly CRT. We use the 4-hour CRT. So that's lesson number one. Is that the only time we use the hourly CRT is when the market is doing one-sided price movement and the market is going in a one-sided way and not doing, in a consolidation. In this case, the market is consolidating. Although market is doing one-sided movement to the upside, but guess what? We're bearish. So the lesson of Thursday is before we talk about the mixed trade recap is that the only time I will read out the rule right now. Let me grab the rule right here and read it to you guys. The rule says, on a New York continuation day, in order for me to use an hourly CRT instead of the 4-hour CRT, there must be clear one-sided price movement. If the market isn't clearly continuing one-sided in one direction, then I use a 4-hour CRT. I only use the hourly CRT when the market is making a clear one-sided price movement during a New York continuation profile. In this case, with New York continuation profile, let us submit the high of the day, but market is not continuing in one-sided direction. Actually, market is continuing to the one-sided direction to the upside rather than to the downside, so we're using the 4-hour CRT alone. And when the market is not doing a one-sided clear price movement to the upside or downside in New York continuation, we're going to be using the 4-hour CRT and above only. So that's lesson number one. Lesson number two, during this missed trade, our 4-hour CRT was over this candle. We had this, this model one, you get confirmed, but the rest of the never got tapped. So at 12:45 is when the market, or 12:30 is when the market tapped the resistance block, eventually made an equal high, then eventually went down to the downside, hitting our, deep profit, eventually fully reversed, hitting our stop loss. So the lesson of the trade on Thursday would have been a probability loss. Why? Simple, because it didn't break any trading gun rules. And how were we able to execute this trade to the downside? Simple, because although you said that if Leonard's move is correct, New York should support it. New York did support it. High, low, higher high, lower low. This is what? A OTE. Right, so it's simply OTE. You can see the 0.86 is right on the resistance block short. So he got supported by New York, and it was a New York OTE before the candle closed. Look how down bad he went back. Look how much it crashed to the downside, right? So it was overall supported by a New York session. Even this trade, right? This trade right over here, the setup right over here. As I said before, if I'm bullish or bearish, if the lesson move is correct, New York should support it. And guess what? New York did support it. Low, high, lower low, higher high, a New York OTE. So now if this is a 4 COT, you can go to one as a quick little sauce here. If you're very advanced, you could go down to the 5-minute time frame and look for the 5-minute trades with a 4 COT. So the time frame alignment would be 4 hour to 5 minute, hourly to 1 minute, and daily to 15 minute, weekly to 1 hour, monthly to 4 hour. And that's the best time for alignment if you were looking to be very advanced. But that's only if you're very advanced. Otherwise, to not do it because you're gonna get fucked. You know what I'm saying? So on the lower time frame, you can see there's a deep OT here. The deep OT straight away was on the 0.86 price mark of the London session. The OT, the 0.86 is right on the rejection block right over here. You can see they all make sense. It's because it's fucking controlled, right? You can see the 0.86 mark is pointing right straight to the rejection block long. So you come here, you either enter the 4 higher time frame and go down to lower time frame if you're more advanced. And the only time I usually say you want to enter this 4 hour to 5 minute and hourly to 1 minute is if you have OTEs, right? And if you already have a predetermined trade. So, and there's a deep OT. The deep OT goes beyond your entry on a higher time frame, like 15-minute time frame, and then eventually goes down to scale down to the 5 minute and look for that more advanced entry. So you can long this up. Right, eventually this is such a size stop loss. You have to squeeze your stop loss by 1 pip because we're gonna try the right side of the market, and you can target the same target right over here, but go for more RR. This would have been a 5 RR trade, right? You can see the same thing was on Thursday. All of Thursday went to the loss. You probably lost. You guys don't always be right? That's the one problem I face right now currently, is that I always want to be right. You're not always gonna be right. Right, even when I'm wrong, I don't feel no emotions, right? And we're currently on Thursday here. So the setup got tapped. You can see Thursday right over here. The 0.86 mark is literally pointing at the resistance block short. So you take the resistance block short, and you guys know the only time we take the London session moves is during New York, is when it's supported by New York session by having OTE. Right, if you have OTE, we can take it. In this case, it was supported by OTE, so we could have shorted this down. And you can see the 0.86 mark is pointing at resistance block. The 0.86 mark is pointing at resistance block. Usually, the 0.86 mark will always point at resistance blocks because market's controlled. And resistance blocks are a imbalance / total soup. So that's the lesson of Thursday. It went to a loss, beautiful loss. So, but wondering why did you not profit anywhere down here? Why did you go for all the down here? It's because although I said that, in this case, the reason why we're going down here, I don't know why I said that, but I mean, the reason we're going down here is because the 4 CRT, and eventually in Thursday and Friday, so we go for a stick profit. Since we're going to the highest look is a weekly time frame, we just want to target the CRT low, CRT high of the 4 time frame. In this case, the 3C low, the 4 CRT lows are all we're targeting, and eventually never got met, and eventually stop loss. And lesson of Thursday. Lesson of Thursday is that the only time we can take the London move in New York is when New York supports it by having OTE. Next lesson is that the only time we take out of CRT and a New York situation is when the market's doing clearly one-sided movement. If it's not doing clearly one-sided movement, we do not take the out of CRT. We stick to 4 hour CRT and above. Now going over to the Friday setup, which we had a short, which we had a mistake right over here. So now going over to the Friday, as I said, the same lesson of Thursday. And unfortunately, on Friday, that mistake happened again. And the lesson of Friday, and when I said that Thursday lesson is that the only time I take the out of CRT was the market clearly one-sided movement. That lesson I got during the Friday trade. So this now the weekend ended, right? So now I know, okay, Thursday I should not use the out of CRT. Friday I should not use the out of CRT because on Friday is a day where I made the the clearly one-sided movement mistake. So on Friday I made the mistake, Now I joined it down. So now looking back, Thursday, I would not be using a LCOT on this specific day. I could have used a forward series. I could have used LCOT because market's doing clearly one sided movement, but it was no entry. But in a lower time, if you go down here on this Tuesday trade, there was a setup, but that setup never followed my trading guidelines, so then it never took it. It was an LCOT long. They never took it, and never followed my trading guidelines, so they didn't execute the setup. But enough ranting. We had the same cost to the downside. I was just looking for this continuation of the COT, but since market's chopping and market is doing clearly one-sided movement in a new situation, we shouldn't be using LCOT. But in this day, I said this is the day where I made a mistake, and the day before that, I never found out that mistake. I never found out that flaw. So we had LCOT. Now go to a low time frame. I was looking for that short. At first, we pushed at the high. I was looking for that SMT. I was looking for that Philly swing short or the directional block short. At first, with the Philly swing, so we want to take a Philly swing because we only take one model at a time. So our initial entry on this trade would have been this short and not this short. But eventually, I was in the market during this time. Eventually, when this time came around, I had another shorting opportunity, which is very nice. And you could see on this shorting opportunity, what we had here was that we had a LCOT. We had a SMT with the quality pair, with the quality asset. We had a Philly swing in the lower time for the execution. We had SMT with this candle. So eventually, right after that, SMT with a point of interest or sub of point of interest, we're looking for 4 consolidation candles. Eventually, we could see we consolidated right after the SMT. We had 1, 2, 3, 4 consolidation candles. Eventually, I'm looking for a total sub short, which could be this body of this resistance block. We short that down to go lower. Eventually, market never gonna take profit because this setup right over here did not follow trading guideline rules, so it was gonna fail. Simple as that. And eventually, I missed that. The market. I was in the market during that time. Eventually, something happened here. I was like, okay, I'm gonna take this one. But you can see that there's a difference between each other, right? In this case, market consolidated a very tight range. In this case, market reflected, which is still fine, but we wanted to consolidate like in a close range. Consolidating the close range is what we want. In this case, you can see market had SMT, but if you had a huge reaction back to the downside, and eventually started doing some slow price action, eventually took a short. But that one over there fucked us up. Why do we not want the market to do a big price movement? And why would want the market to do some consolidation candle or very tight consolidated candles? Is because our entries, so that our entries don't get fucked up, right? In this case, our entries got fucked up because market is doing big volumes. That means market's gonna push up, push down very hard. So that's gonna cross spread to come around and fuck up our entry. In this case, so it happened, and start eventually went deep profits. I was like, okay, this should looks all right, but I feel like there's something wrong with the setup. And eventually, there was something wrong with the setup, and eventually fully reversed, hitting a stop loss. And right after that, we had another setup, which was on Friday. On Friday, right in here, which we had a 4C to downside, a New York reversal profile 2, 5-day commission, 9 manipulation, 1 PM expansion. We had all the market constant narrative. I'm simply gonna talk about the setup. I'm not gonna fucking talk about the constant narrative because it's gonna take too fucking long, right? But the lesson overall, going down to a lower time frame, since it's a mediocre reversal profile 2, we can use the LCOT as the advanced entry. We can use the ADM COT as our advanced entry here. So we use the ADM COT as the advanced entry. We can have the 5-minute entries here. The 5-minute time frame with the 5-minute SM failure swing short, with SM2 the quality asset. Now with the low time frame to execute the failure swing. We had a very high, purge it out. Looking for 4 consolidation candles after the purge. Boom, 1 market reflected very big, but sometimes it's not always going to be, as I said before, it's not always going to be guaranteed. It's not always going to guarantee market pushing, consolidating, and it's not always going to guarantee market consolidating. in this case pushed away, but market didn't do a big push, right? It didn't do a big price movement like this. You can see this right in this case right over here. Market did a big price move to the downside, while this one it didn't. So we're still valid. So we had eventually have 1, 2, 3, 4. Eventually over here, I'm looking for a total sweep short, which was this version block short. I'm going to put a stop loss right above this, a couple of ticks above it, just to cover the spread and target the CRT low. So since we're going with the higher time frame, which is the weekly time frame, we could target the weekly CRT low, we could target the 4 CRT low as a risk to take profit. And after targeting that, market fully reversed and hitting our eventually closing for the week. So the lesson of Friday is on a New York situation. The only way you can use the Alice CRT is on a New York situation day. In order for me to use the Alice CRT instead of the 4 CRT, there must be a clear one-sided price movement. If the market isn't continuing in one side direction, then I use a 4 CRT. I only use the Alice CRT when the market is giving a clear one-sided price movement during the New York situation profile. In this case, it's a New York situation profile, and we got proved wrong, but it's a New York situation profile. But since we're using Alice CRT, we can't use the Alice CRT. Why? Simple, because since we're in a New York situation profile and market isn't doing a clearly one-sided movement, we cannot take it. You can see the hourly time frame. Are we clearly doing a one-sided price movement in the hourly time frame? We're not. We're fucking consolidating. So there's no need to use the Alice CRT because why? There's so many fucking Alice CRT here, right? There's Alice CRT here. There's everywhere, right? So that's lesson number 1 on Friday. That's lesson number 1 of the whole week. And there's many other lessons that I talk about throughout the video. Now, if you pay close attention and looked at the 5 AM 50 high, there was no valid high, right? You see, there was no valid high. And how are we still valid to bypass the valid high, valid low rule? Was because if you look in the weekly time frame, during this time when the market was all over here, we're at the top of the week. And as you guys know, Thursday and Friday capped the weekly range. That's why market reversed fully hard back to the downside. And as you guys know, on Friday, so we're going to retrace. Usually Friday's going to be retracements. We're at the top of the weekly candle. Market can't close in a big bulky candle where there's no wick. Market needs to close in a wick, so market needs to come back down. So that's the only way you could bypass the Friday trade. That's the only way you could bypass the valid high, valid low rule is by using logic. And the only time I bypass the valid high, valid low rule is on Fridays. And when I'm talking about Fridays is when the candle is when the weekly candle is only up without when the weekly candles continuing without making a high. So by that we can bypass the valid high, valid low rule, then eventually short it down for the weekly candle to close at a fair price and create a wick. Right? When the weekly candle has no wick, and when the Friday, that's the only way we can bypass a high, valid low rule. So there's a lesson of the week. Very lesson of the week. It should have been a fucking 25-hour week, right? With 25-hour week right over here, 21-hour here, 3.5-hour here, a 3-hour here, a -1 or -1. Should have been a 25-hour week. But yeah, thank you for watching. Make sure you guys like, comment, share. Very lesson of the week. And my goal from now on forward is to have a free mind and just to fucking not look for the entry pattern, right? The problem I'm having right now is the entry fucking pattern, right? I'm so glued to the entry pattern that I am missing these fucking setups, right? I'm like, I can't take a trade without having confirmation. I don't need to have that confirmation because I was just fucking studying Roman the whole day today. I was like, what's the difference between his entry and my entries? And when I check the difference is that he doesn't give a fuck about that. He barely gives a shit about the entry. If the 4-hour, he enters on our hourly duration blocks, hourly order blocks, a 4-hour, he levels without having the confirmation. So we could be doing the same thing, right? So that's the lesson of the week. Many other lessons with that. But thank you for watching. Please like, comment, share, join the channel below, and I'll see you guys later. Peace out.